Can you please tell us a little bit about yourself, first with Emilia, then you, Martin, so that the people can know who you are, what you do?
Yeah. So, hi everyone. I'm happy to be here. So, I'm Emilia Jörg. I'm an investment manager at Future Flow Group, where we invest in tech-driven startup at the early stage. So, in the seed, pre-seed stages. Quite an open, sector agnostic, I'd say. Ultimately, so I've led myself on investments into geoscience, consumer tech, fintech, ad tech, and a bunch of different areas. I'm also a scout at an EIS fund called Love Ventures, and they're also looking at consumer tech, fintech, and prop tech. So I'm supporting there on the due diligence side. In my role as an investment manager, I follow the full process, so from origination through to due diligence, through to closing the actual investments with the startups. I'm also quite involved in the ecosystem at large. I'm co-leading a global accelerator called Startup Leadership Program. I'm also a mentor at UCL here in London. And I do try to attend these kind of events when I'm able to, because I think they're a lot of fun and hopefully also useful to the founders.
That's great. Thank you so much, Emilia. Martin, do you want to just say in a 1 minute version of who you are?
Yes. Okay. Martin Brodowski, based in Vienna, partner in a venture capital fund based in Prague, investing predominantly in Czech Republic. We are pre-seed seed fund, ticket between 100,000 to 1.5 million. We're quite young, 2.5 years in operation, 15 startups, 35 million under development, 35 million euros under management. We purely agnostic, but I'm focusing on fintech, insurtech, deep tech for a fund. Yeah, pretty much in 1 minute.
Yeah, nice to meet you all. I'm Omar. I'm a VC at Supernode Global. So we're a seed stage fund based in London, and we invest purely in media tech. So video, audio, gaming, and immersive content like VR and AR. Prior to being a VC, I was in a growth role at an audio streaming company called Mixcloud. And I started my career in investment banking for my sins. And yeah, that's me. Nice to meet you all.
My name's Jazz, the CEO of Verify Ed. Together with my co-founder, we created a company that will form ability for people to see their awarding institution. So we issue immutable blockchain-backed certificates for students at universities, in professional bodies doing CPD, and awarding bodies that are examination boards, etc. And everything is immutable because of the blockchain underpinning it, but we took something that was very superficial and reputationally bound in terms of the paper certificate. We knew for course providers they were expensive and manual issue, and there's reputational damage happening globally with people actually creating fake certificates, and we've studied where they haven't. For learners, they actually have a lot to take care of, share it and get it verified, and for recruiters, they have at the minute £12 a £30,000 UK degree. All of that needs to change. So we created a very simple, very elegant solution for course providers. Instantly, they have control over what's in circulation, how that actually across, and learners actually can aggregate all the learning or the recruiters see them all. The World Bank project that was aggregating micro-credentials initially from IB. And so we've taken, so we see micro-credentials and learning being stackable over someone's life. It creates a triangle of trust between all three, so the course provider, the learner, and recruiter all the same evidence whenever they're doing it. We've been working since 2019, but before that, validating the idea, but actually building our pipeline, the World Bank, Law Society of Ireland, Future and IB in current partnerships, and we've also got all agreements that are on the late stage. We have clear awareness that there are other markets, but UK company doing blockchain credentials for education, and actually we're the only one using the ledger that we are leveraging, which is one of our defensible aspects. Other suppliers can't issue blockchain as standard solutions because of the high transaction fees and some of their solutions that they say they do. We also have amazing strategic partners and networks, experiences to date, and we know that it's interoperable. We have a very basic business model, which is the issuer pays per user per issuing year. Every year, that just the year that they issue to them. I know that everyone puts a big number here, but there are 556 million we've looked at across professional bodies and learning that could be paying that fee, and that estimates the TAM at a very large number, which everyone will say. There's very clear evidence where we got 150k friends and family round, where we said we'd build the MVP, have more than one customer and live users on the platform last April, and since then we've been scaling and looking to build further. We look for our team, get to 19 universities in the UK or institution sales, and 100% retention. We obviously have a hockey stick, but we're very ambitious and we see this exactly. And there's a team behind it that we've been working together since 2015 in different companies. So we'll look forward to getting any feedback, but Abby and Jock and myself are very proud to be driving this project forward and seeing the partners with whom we work at scale as the Law Society did, 15,000 credentials in 21. Thank you very much for your time.
Okay, I would like to ask about what you expecting will be your customer acquisition cost for your end client and for your partner, as issuing certificate seems to be not very often used service.
What was the actual question? The cost per customer acquisition?
Yes, yes.
Yeah, so we actually haven't got, we've got 4 customers so far, and at this point it's actually costing us about £600.
Okay, and what you kind of like? And these 4 customers are the institution issuing the certificates, or there are customers who want to handle your customer, your handle for them their certificates?
So in actually issuing the credentials, it's often the awarding body. So the Law Society of Ireland is an awarding body that issues credentials. The University of Middlesex is an institution that has awarding powers. The World Bank actually isn't the awarding body in the project that we're doing, but FutureLearn and IBM are the ones issuing the credentials. But actually with FutureLearn, for instance, it's the Raspberry Pi Foundation in one example, it's the Open University in another, etc. So the awarding body is the one that is actually issuing the credential, but there are different parties that are paying for those credentials in different scenarios.
I mean, I think it would be interesting to just go a bit deeper on that, because although I see that this could be useful, I'm a bit stuck on the side of determining the actual demand and the willingness to pay for this. So sure, they are the issuing institutions, and right now they're already issuing the certificates, but what's their incentive to pay for these solutions? Because if someone is losing their certificate and they're coming back to the institution to request a new one and paying a fee for that, that's added revenue for that institution. So why go the extra mile to do this?
Yeah, that's a fantastic question, Amelia. So one of the things that people don't recognize is the amount of time that it takes for those institutions to issue that individual certificate. And actually the benefit of that certificate is it's a piece of paper that's posted out that doesn't have the data underpinning it in terms of the skills that the individual has learned, and actually doesn't create a lifelong bond between the learner and the alumni. the learner and the institution. And actually, one of the things that people are really keen at having is that communication link for the lifetime of the learner as they continue growing through their careers. So when I was at Winchester University as Director of Learning and Teaching, we saw our graduates leave every year, but actually it would have been great to have had that bond with those alumni that compounds year on year. And actually, as micro-credentials now become popular, we'd have been able to communicate and say, oh, you did business studies with us, or business management back then. We've actually got this great new micro-credential that you might be interested in. And actually, lots of universities are keen to talk about that as an opportunity. So I think there's a benefit, but also there's the cost saving that everyone looks at initially to say, okay, it costs to issue, but it means that we don't have to issue the print. We don't have to do the postage, which for lots of people is between £2.50 and £4 per postage.
We'll continue with their perfect gift.
Hello, I am Tish DeZoiser and I am the founder of Their Perfect Gift. Well, what is Their Perfect Gift? Well, it's a gift card that you can redeem in 32 million places. So the first thing you've got to ask yourself to be able to relate is, have you ever bought a gift card for a retailer? And if you haven't done that, have you actually received one? So if you have either of those things, you'll understand the pain. So just to look at the UK market, this is an industry that is currently valued at £7 billion and growing. And this industry data comes from the UK Gift Card and Voucher Association, where the numbers are put together for them by KPMG. Three main core problem areas for the market at the moment, because most of them are around 90% are retailer specific. So what that does, it restricts your spending to that particular retailer. It lacks the personalization, because that's one of the core reasons you actually buy from them for your gifts. But also you are an unsecured creditor at the point of insolvency. And if that retailer goes bust, your money is pretty much gone as well, as recently demonstrated. So what we see as the opportunity and our solution is we have a gift card that is redeemable in 32 million global outlets. You can redeem it online or in store. You can personalize it by video, by picture, by messaging. We ring fence the funds held in a MasterCard secure account, and the card is delivered securely to the end recipient, who can activate it via our website, or they can download our app. And the app also allows them to track their spending. It has access to cardholder benefits like our marketplace and our hotels and holidays, and does personalization through augmented reality. Our retention strategy and adding value is our marketplace, where you can buy branded products from the likes of Armani, Bose, Ray-Bans, etc. And these products are below retail price. You can also get up to 12% discount on hotels, leading hotels around the world. And there's also a concierge service to buy your long and short haul vacations. And whilst some of these well-known faces, you might recognize them, Martin and Paul Lewis, and Martin advocates how people should be very wary of buying retailer gift cards, especially when the point of insolvency kicks in, as does Paul. But Paul doesn't like the fact that our cards come with a fee. What he doesn't realize, and we've already had this conversation on Twitter, what he doesn't realize is that our cards are expensive, because the fundamental technology that underpinning it is fundamentally no different from what is commonly called a neobank. And in order to create our offering, that's what we've actually had to create. And with our neobank, later on this year, we actually launch our savings accounts, where the funds will be held in a ring-fenced account for consumers in a bank account with the Bank of England, who will safeguard the funds. And those savings will also be used in our other platform, which provides an uplift for people's savings in retailers that they use on a regular basis. So pretty much most of the UK high street is already in. Okay, we are a business that tries to make money, and all of our avenues actually generate income. We've served over 1,000 corporates since we started, 5 million of revenue. Our total addressable market is, well, it's not small. Our market is to focus on corporates, because corporates put our product in the hands of consumers. Our team come from areas of technology, Investment banking and finance. Myself and Andy are ex-BDO. We're qualified chartered accountants. I myself are an ex-director of an investment bank. And this is how we compare to our competition. Our mission is to be the best known gift card in the market, both at a consumer and corporate level. And how we intend to use the 2 million we are looking to raise is pretty much purely for acquisition of customers. And roughly about 2/3 of the money we spend will put 1 million people in the app literally overnight.
So I was wondering, I realized that we ran out of time at the end there, but I was curious to know more about your competition and then also your target sort of consumer profile.
Okay, so our competition is pretty much retailers and their gift cards, because they tie you to one retailer. But if you went onto a UK search engine and typed in MasterCard gift card, it would send you to the MasterCard website and then therefore send you back to me. Or it would find you by because I'll be the first one below the paid ads, because we don't pay. As far as consumers are concerned, we don't really target consumers that much, but our website sells to both consumers and corporates. One of my shareholders, who's a partner at one of a private equity fund, he likes to call consumer marketing as a leaky bucket. So we focus purely on corporate because that drives our consumer marketing.
Out of curiosity, how you look your cap table, or like how much you are dependent on the MasterCard? Because I kind of assume they're your gateway to make this all happen.
They are a scheme. MasterCard is a technology company. So our tech stack is no different from the debit card that you're using right now. I mean, we could ride the Visa rails, but to be honest, when I tried to speak to Visa, they weren't as forthcoming as MasterCard was.
Okay. I mean, like, are you linked on equity side, or it's just a strategic partnership?
MasterCard have no equity holding in our business.
Okay.
Maybe it should highlight that to date, we've only ever raised £314,000.
Good. I like it.
Thank you.
And what does some of the revenue and traction look like today?
So last year we did about 1.7 million gross revenue, probably roughly about break even on that number. But I want to put some more costs through, so I'll have a tiny little loss. But most of our money comes from corporates, and we pretty much have a 100% retention of the people that buy from us. Does that answer the question?
Yeah, and is there a consumer profile within the corporates that typically uptake the benefits?
Yeah, so the average on our gift cards worked out to be about £100, whereas the UK average is normally around 20 to 25. So we're already considered at that higher echelon. And for that £100, we usually charge £5.99, which covers all the fees, the packaging, postage, the processing costs, activation, etc., etc. Yeah. So the type of consumer that we have tends to be cash rich, time poor.
Thank you.
Right.
But look, there's 250 million gift cards and vouchers sold every year, and I'm not a greedy man.
We're gonna move on to Yoolox from David.
Hello, everyone. My name is David. I am one of the 3 co-founders of Yoolox. And at Yoolox, collect feedbacks from guests in public venues and reward them with free wireless charging. So if you are the operator of a venue, you are troubled by questions, what your guest thinks about your services, how they rate cleanliness in my venue today. This is especially a problem that occurs with the COVID-19 situation. But also questions, does my guest know about our latest product, or how can I make my guest aware of our special deal of today? And we at Yoolox, we provide this operator of the venue a solution with the information that we collect from guests, and we give them an overview of what guests actually think about their venue and about specific questions. And not only do we give them back the answers from the guests, but we also match this with numbers that we collect from the industry, and we anonymize them and give them also this information back. You can see this here on the screen as an industry benchmark, so they know where they are actually and how they can rate their own venues. How does that work for the guests? It's relatively easy. The guest just brings his phone close to our charging spots. It pops up an NFC tagged message. You answer one simple question or give a rating, like as you can see here in an example that we did with Subway in Germany. And then the wireless charging starts. Why wireless charging? So we can already see that this is something that has already been introduced in the market, and it's nothing new anymore. A lot of other things have gone wireless too, so charging is the next big thing. And think about all the advantages that you have without the compatibility issues between Android and iPhones and anything with wireless charging. It's all one common standard. And if you ask yourself how many devices, how many handsets in the market are already there that use wireless charging, it's already over 50% as we speak. So this is what our product looks like. It is seamlessly integrated into the existing furniture, into the existing infrastructure, and it sits under the surface. It charges through the material, and it doesn't change the design of your furniture at all. How do we make money? It is as a service model. Our customer lifetime value divided by customer acquisition cost is 8.5%. If you are more interested in the numbers, I can talk to you about these in a one-on-one. We have deployed over 1,000 spots already with customers in our 3 verticals. And even though the COVID-19 situation in 2020 was not very good, we could grow by 60%. And if you look at the total market, it has a size in Europe only of 1.8 billion euros, only in these 3 verticals: co-working spaces, hotels, cafes, and restaurants. We have competitors in the fields as well. We think that we do have the best solution at the moment because our product does not require you to download any app. It's completely app-free, and we also filed a patent for this in December last year. We are raising at the moment £850,000. It's 1 million, of which 40% is already committed to bring our product to the next level and to boost sales. And we're a team of 3 founders. I'm David, and in the center, Ralph and Pascal, they're my co-founders. We have known each other for many years. If you want to be part of the journey and take wireless charging with us to the next level, then please talk to me. Thank you very much.
Hi, David. Thanks for your pitch. I'm curious about whether there's opportunity currently, or if there's opportunity for ancillary revenues or cost savings for the venues, in addition to the customer feedback. And if so, what does the payback period look like for a venue after you've provided the hardware and software installation and all maintenance and all of that?
For savings, like what do you mean by this? Savings for the venue, or?
Yeah, so I'm curious about, so right now the value add for the venue is to be able to collect customer feedback and share any deals. But is there an opportunity to also provide, like, what's the cost for them? Are they currently collecting feedback? Are they currently getting that message out to them? And
okay. Yeah, understood. So yes, so if we work together with a brewing company from Switzerland, for example, and if they want to ask one qualified question from their end consumers or to an end consumer, their cost for this would be approximately $5. In our case, if we ask the same question, it's only 50 cents. This is because our charges are like $5 a month, and you can at least expect 10 responses per month. Like reality shows, it's much more. It's up to 60 responses per month.
Oh, interesting. Thank you.
You're welcome.
A little bit more aggressive question. Why, like you say, you have some competitors, like how much value you are saving or giving to like big places? Like, you know, we have a WeWork, you have Subway, you have a AWG. Why they not create the solution in house if they have, like, let's say as a EWG 2,000 places? Because as I know, and they are kind of greedy, so they try to make money as they possibly can.
Yeah.
Don't take WeWork. WeWork, it's a losing money company, but they're regularly very, very healthy cash balance company.
Yeah.
And it seems contradictory. Like why they will outsource this part to someone else?
So what we also offer, and especially for these big customers, like for example Subway as well, what we offer them an API to our system so that they can actually link to their existing system. Because you're right, actually, a company like Subway or even WeWork, they have a common tool that they use all over the globe, and we have an API that can actually that can be used with our product. They just use our charging spot as an enabler to get this question answered. Because if you just put let's say a QR code somewhere and ask people to give them feedback, in most of the cases it doesn't happen. So if you get rewarded with wireless charging, it's kind of an enabler for you to answer that question. And it's very simple.
I get that, but you know, they can put the charger on the table themselves. Like they do have a cable chargers now.
Yeah.
Of course, to get this nudge for the questionnaire, it's another part. But I'm a little bit worried. Like if they will see you figure out a good way to do it, you will be gone by tomorrow.
I don't
at least they're like, I like the company from operational like efficiency. I'm not maybe Subway is also really good in that. I just like see like what's your competitive advantage also towards these big players, and also like I don't see a kind of like a long-term lock, or like, you know, we can call it business mode around it.
It really comes also from the technology. Our technology does not exist like this in the market. Like bringing your phone close to the spot and not downloading an app and anything. No one else has that technology at the moment. So this is what we filed a patent for as well. We really worked on this, and so for them to copy our model would cost them, I would say, a lot of research to get to this point. So at the moment, the stickiness of our model is really like the combination of, it's not the charger is just hardware, it's really the software angle of this. So the software and hardware combination. Also to say that the hardware is really cheap in this. It only makes around 10% of the whole value creation we have here.
Okay, thank you.
So we're gonna move on to Wavepiston with Michael.
I'm Michael Henriksen. I'm the CEO of Wavepiston, and Wavepiston, we are making wave energy competitive. So we are an experienced, very diverse team from diverse backgrounds, but we're all focusing on the two of the main challenges in the world. That is replacing renewable fossil fuels with renewable energy and delivering more fresh water out to the people. And we get it, how we do it is we get the energy from the waves. And why waves? Because they are available all over the world. They have a very large potential, and so far have not been, there's not been success in exploiting the wave energy. And the reason is that it's difficult, but we have the solution for that. It looks like this. It's a number of energy collectors, or we call a string. Just going to show you on an animated video here. So as the wave passes by, these plates move back and forth, our energy collectors. They suck in seawater, increase the water to 60 bars. So this pressurized water is then transported to sea via a pipe. On shore, we can then either desalinate the water via reverse osmosis or generate power via a turbine generator. So the advantages here, if we have these two products, but it's also that we have a very low weight per effect, and weight is a very good indicator and cost in this situation. And we are on par with the offshore winds. Secondly, we have many identical components, and that sort of increases the automation in the manufacturing process. At the same time, all components are designed so they fit into standard 40-foot containers for easy transport all over the world. And last but not least is that it's a very non-intrusive system, so we will not spoil the view, we will not spoil the environment. So far in the technology, we have validated that in the North Sea, very rough sea and high waves. It's been a scale model of a half scale. And now we are into what we call our demonstration phase, where we are going to install our first full-scale systems at Gran Canaria in the Atlantic Ocean, where we're going to produce power to the grid and desalinate water. We have for this phase received grants for the project here of €6 million from the EU, And we have also started this journey of installing the system. Here's a picture of it lying in out of the coast of Gran Canaria. This is our first testing of the full scale. There's fewer energy collectors. We're testing some components, testing the mooring side, etc. Here you can see also the visual profile versus a wind turbine. So what we're doing now is that we are preparing the full-scale installation will be late 2021, and then another installation will be in 2022. So what we are now, we need to show the results, show that we actually can deliver what we say we can deliver. Commercially, it is a very, very large market, both in renewable energy and desalination, a triple-digit billion-euro market. And how to attack this is that we do it in a stepwise approach. So we go to a market focusing on the first step on the small-scale solutions. We cannot, price-wise, we cannot compete with these large utility-scale solutions. But for small-scale, for island, coastal communities, hotels, resorts, they are depending on diesel generators, and there's a very large water scarcity. And that market is also considerably, it's up to 28 billion euro in total. And then we have also contacts from different countries, Canary Islands and Martinique as a focus. And then after that, the utility markets are open up. So what we are looking for is that we have the grant in place, the partners. So it's the equity issue. We already have 2.3 million euros secured in this round. And now within the next year, we need approximately 1.2 million euro. Revenue is expected around 2023. And the potential exit is around 3 to 5 years from now via an industrial partnership. Thank you.
If I can jump in, I have two questions basically, and the first one is the impact on wildlife and your views on that, because I appreciate probably in the northern seas, in the Baltic seas, there's less surface life potentially, but if you're talking about tropical waters, there's a lot more life going on in shallow waters, and overall just what's the disturbance there. And the second point is the efficiency side. So if you can walk us through a bit the efficiency of this, of extracting the energy from this.
Yeah. So first on the wildlife side, there's been several studies on wave energy as such, and there's not been any negative impact on the wildlife, neither flora or fauna so far found. Of course, it's very important when you have these projects that we have this environmental studies also. We're actually doing that also in Gran Canaria. And the thing is that there are no toxic materials, and also the movements of these energy collectors, they move with the waves. It's the same movement that everything is in the water. Secondly, that's the efficiency. So if you there are different types of looking at efficiency, but let's look at if you're focusing on the area needed per megawatt hour, per megawatt, or is that your question is related to? If you compare with the wind turbine, so we around one square kilometer, you can say our modules so around 7 megawatts of rated power. So it's comparable with wind, offshore wind, actually a bit better than offshore wind power.
And a slight follow-up to that, Michael, thank you for the presentation. What are the other kind of, I suppose, features or advantages and disadvantages relative to offshore wind and other sources? So I know offshore wind struggles with being quite intermittent.
Yeah.
How does this kind of technology fare?
Yeah. Yes. So it is renewable energy. So of course, when the waves are there, then it's where we have the energy. In some places in the world, the waves are more or less there the whole time, but of course, it will vary over the days and over the year. So that we will not solve with our system. The good thing is if you can combine renewable energy sources, then your production window, your energy production window actually increases, because you have production different times of the day. Like waves come from the wind, but it's delayed. So you have a production that goes over several more hours if you combine it. That's more or less, you can say if you compare with wind and solar energy. And then of course this is a new technology, so we need to mature that technology also to get out to that level.
And the cost curve, I suppose, for other renewables like solar and wind came down quite dramatically. Are you seeing a kind of similar pattern emerging in Wave?
And we have it here. That's also we will say it in the beginning. We start with comparing us with diesel generators, you know, where the levelized cost of energy there, and not on solar and wind as such on the utility scale. So we start around you know, on average half the costs if you compare with diesel generated power on these small islands, etc. But we see the same possibility of going down, you know, increasing the efficiency and decreasing the unit costs as we go up in utility scale.
I see. Thank you.
Can landlocked locations benefit from wave energy, or do they have to be somewhere on or near the water?
Sorry, I didn't get the beginning. Sorry.
Can landlocked locations benefit from wave technology, wave energy?
Landlocked, it depends on what grid they are, because it has to be in areas where you have energy in the waves. So if you have a grid where you where we can connect to where there is waves in the vicinity, then of course it can be, but otherwise not.
Hi everybody, my name's Leo. I'm the co-founder and CEO of Better Universal Grub, otherwise known as Bug. We make it easy to cook delicious insect meals at home. But why insects? So 1/3 of the environmental crisis starts with the food system. As our demand for protein doubles in the next 30 years, it's critical we rethink our relationship with food and find better ways to feed ourselves. Amazingly, insects are one of the cleanest, greenest, most efficient, most sustainable protein sources in the world. They're also unbelievably good for you. Crickets, for example, are up to 70% protein. That's 3 times the amount in beef. They've got more iron than spinach, more calcium than milk, more potassium than bananas, more B12 than red meat. The list goes on. So they really are a superfood. But they're also delicious. 80% of countries around the world eat insects in some form, not because they have to, but because they love it, because insects are tasty. So in many ways, we in the West are the weirdos. The question that we have, and the one we're trying to solve, is how do we change perceptions around this otherwise sustainable, delicious, but undervalued superfood? And answering this question, of course, starts with the early adopters. We've been speaking with them for the best part of a year, and they're telling us that they're not scared of eating insects. In fact, they want to cook and they want to experiment with them for themselves. This is currently really difficult to do. No one knows where to buy them. No one knows how to cook with them. And everything on the market is a snack. Snacks don't get meat off dinner tables. They don't fundamentally solve the problem for early adopters. This is why we created the Bug Kit. 3 incredibly delicious cooking kits designed to be flexible around popular everyday meals. So we've got a sticky ginger, sesame and teriyaki cricket, perfect for really any stir fry. A crunchy cricket with Italian herbs, garlic and black pepper, great in any pasta or salad. And a buffalo worm falafel mix with parsley and harissa, great in again any salad, pita or wrap. We're looking to sell these kits direct to consumer through our website as both a subscription and individual purchase from £5 per kit. So we've got a starting gross margin of 43% on subscriptions and 52% on individual sales. We're also building a bank of high quality insect recipes on our website that are designed to inspire your palate. We want to be the world's best insect recipe website and really be the authority on cooking with insects. In April last year, we launched the world's first insect recipe box, which was actually our MVP. Since then, we've been testing with customers, trying to understand what is going to get people cooking insects on a regular basis. And on the back of that learning, have now developed the Bug Kit and are looking to raise a £200,000 seed round to manufacture the kits and to outsource the fulfillment as well. We've been featured by a number of media outlets and also by celebrities of the likes of Prue Leith, who's cooked up a series of videos and a number of our recipes on her Instagram, which we're really excited about. But it's not just the press, our customers love us too. So Laura said, I love the recipes, found it really interesting trying insects for the first time. Asia said, I'm telling everyone I know about you. So just a snapshot here of what some of our customers are saying online. How big is the market? So we're going into £4.5 billion total addressable market just across Europe, but initially focusing in on a £45 million beachhead market in the UK, really targeting young professional flexitarians. We're looking to break even in year 3 with sales of £3.9 million and a net profit of £350,000, capturing about 9% of the beachhead market, so still plenty of room to grow. Our team consists of a designer, an insect scientist, and a head development chef. I've designed for a number of health and sustainable focused food brands, selling thousands of meals into the UK's biggest supermarket. My co-founder Aaron is an entomologist at the London School of Hygiene and Tropical Medicine. He knows more about bugs than anyone I know. And our chef Will is a rock star in the food development space, being former head development chef at Co-op Supermarket, designing their recipes and their ready meals. So we're now looking to raise a £200,000 seed round, that's SEIS and EIS eligible, and really looking to speak to mentors and advisors who are excited about creating a better food system and helping us make a difference in the world. Thank you very much. I look forward to taking your questions.
You can turn on your microphones and cameras now if you have any feedback for Leo. That was a great pitch, by the way.
Yeah, Leo, it was really nice. I would like to know how you're looking at competition, how you want to differentiate yourself, or what will be your unfair advantage in this business, because it's kind of growing. There is many companies through Europe who rather grow or distribute and various things.
Absolutely, yeah. So, I mean, if you're looking at the edible insect space, as I sort of touched on in the pitch, it's very, very snack heavy. So everyone's, seeing this as a snack problem. How can we hide insects in a bar, in a cookie, in a crisp? And we just don't think this is the right way to think about solving this problem. And it's actually what we found is not what the early adopters want. So this is our core sort of differentiation, with other edible insect startups.
Okay, so basically you showing them you really eat the insects, not like others, like it's on all these cookies, but you don't need to see it.
Absolutely, yeah. And I mean, if you look around the world at places that really do eat this stuff, they are using them in meals. We often joke, it's like trying to show people how delicious prawns are by selling prawn crackers. You're missing out all the flavor, all the deliciousness of the prawn, and you're not really solving the problem because you're not getting meat off the table.
Okay, thank you.
Of course, I'm a bit biased because I know Leo here already, and I think you've done some great improvement on the pitch. I love the pitch. Just wanted to, for sake of visibility, also walk us through kind of your go-to-market approach. So how do you think these bug recipes are going to find their way into people's homes?
Absolutely. Well, are you thinking sort of more our roadmap or sort of marketing?
Yeah, so are you thinking to go through retailers, or is this a D2C proposition? Is it through restaurant partnerships? Where do you think this will be the most effective in reaching audiences?
Absolutely. Yeah, great question. So we're really very much starting with the D2C model. So our website, as I say, through subscriptions and individual purchases. But this for us is about building, the foundations of a community, foundations of, a customer base that then we can launch into retail. And really our ambition is to be the brand to take edible insects mainstream. So for us, this is getting into supermarkets. We're currently speaking to 3 major retailers, and just to get a sense of what they're looking for, and that's the next step for us, getting into supermarkets, potentially more targeted shops like Whole Foods or Planet Organic first, and then, as I say, into supermarkets. We're also looking at as you mentioned there, Amelia, food service. So restaurants like Wagamama, Yo Sushi, even Leon. So places that have maybe more an experimental side to them, more sustainable and healthy side to them as well.
Thank you, Leo. By the way, great pitch. Enjoyed that. Question on your TAM. It was 4.5 billion. I'm just wondering what does that refer to? It feels quite small if you actually count basically alternative meats or alternative proteins, whatever you want to call it, really. Well, what was that referring to, the 4.5 billion?
Yes, glad you picked up on that. It absolutely is bigger. I think if you look at exactly as you say, the protein alternative market, this was really us taking our product where it stands, so the bug kits, and multiplying it by the number of customers that we see, potentially buying the kits from us. So if you start to expand into different product categories, we're looking at a bug burger, we're looking at several other different products that certainly that TAM is going to increase.
Sure. Thank you. No, it's always hard to predict TAM, and especially for kind of game-changing new products where, you know, in 5 years it could lead to a pretty fundamental behavior change. It's very hard to predict what that addressable market will be.
Absolutely, yeah.
Sorry, Maria lost connection, but I'm here to pick up the slack and thank Leo for the great pitch, and thank you, judges, for the questions.
Hi guys, my name's Sophia and I'm here to talk to you today about my app, EndorseMe. During COVID-19, there were so many businesses that started up, so many, and also so many small businesses that suffered from COVID. And they had to move their businesses online. And it's really, really difficult to find some affordable marketing when you're that small of a business from the size of 0 to 10 employees. Now, we are a platform that has come on to help these small businesses find influencer marketing. And I just want to start by saying, yes, this is a very saturated market. There are a lot of companies within this field. But the one thing that makes us stand out is that we are focused on small businesses. The companies that you see here are all focused on acquiring all these big brands like Nike or Gucci and people like that. But we're very, very focused on small businesses. And that's exactly it. So our social media platform is EndorseMe. And what we do is we connect small businesses to aspiring athletes. Again, another one of our niches, sports people. And what we've seen is that through our app, we've seen already 500 registered athletes through our proof of concept campaign, which is currently underway, and 50 registered small businesses. And what our app does is that it connects these athletes to small businesses that are offering opportunities so athletes can get sponsorship and small businesses can get more affordable marketing. And we go to market in March 2021. That's the launch of our app. The way it works is that athletes input their details and their social media details, and we calculate their engagement levels based on the APIs from Instagram, Facebook, and Twitter. And what we do is the small businesses, they put in their business needs, and we collate these recommendations for the small businesses so they can see exactly who will benefit their business. Our secret sauce is that it's a geocentric algorithm. It's based on the people within your location. And we focus on small businesses exclusively for athletes. Our team, so we focused on the tech side and the marketing side. That's something that's really important here. We have to make sure our marketing is on point. Obviously, as you've seen with our competitors, we aren't the first to market here, but we are competitive. We have our geocentric brand from the bottom up, and that hasn't actually been done before. Our total serviceable market, we've got the small businesses, there are 36 million. As we have a patent and trademark in the UK and the US, that's our market there. And with our sports market, because I'm from a sports background, I'm an agent in UFC and professional boxing, I focused on sport. And we have 90.9 million total serviceable market. And they range from 5 to 6 different verticals that we can infiltrate. Our app is free to download. And if they want to really utilize the social network and really do the endorsements, it's really accessible. It's £5 per month. We also allow them to do endorsements through a sliding scale. So they decide, and we take a 10% commission fee from that. In regards to our revenue projections, we're looking at 900K in year one being 2021, and 100% growth rate in year 2, moving to the US market expansion. Like I said, with this, it's all about us getting into the market now and really, really expanding our marketing. Hence why we are looking for £600,000 worth of investment today for a 25% share in our company. This will be focused on marketing. With all the major sporting events coming up, we're really going to be targeting them. For example, the Olympics or the rugby events that are coming up, even in America with the NBA events and some of the more localized events, we're going to be targeting that. But thank you so much for listening to my pitch today, and I look forward to any questions. Thank you.
Yeah, I have a quick question if I can jump in. So I think one of the key concerns, if you're targeting small businesses, so they're probably going to have a smaller marketing budget to start with. So how do you meet that? And the second concern would be controlling the tone of voice and the messaging. So if that's outsourced to an influencer, which you can't control, how does that work in terms of your proposition?
So the way it works, in regards to your first question, on our app, when a small business comes in, we prefer them to have a smaller budget. because we want them to work with athletes that have a smaller platform so they can optimize their platform. So that's why we prefer, for example, we're running a campaign next week and the small business has £2,000 a month to spend on an influencer, which is actually quite a lot because we're averaging £300 per investment for an athlete. So that's exactly where we're targeting. In regards to the tone of voice, we have put a lot of time and money towards the legal side of our endorsements. So for example, let's say you and I go into an endorsement on the app. What will happen is that it will all be sent in a contract. The way it would be done on a normal agency basis, it will still be formalized and sent to both myself and you. And anything that is written in this contract in regards to what you need to post on social media, how many posts, the tone of voice, what we're looking for, what you need to say, it's all within that contract.
It looks quite interesting. I'm just thinking, because you see it's geolocated.
Yes.
But you still basically saying, okay, I need pretty much 40% of the investments going to my own marketing to find my own clients, because then you basically you're taking the influencer in your the athlete and the business, communicate to each other, create a contract, and then basically push the content from the business to the athlete who will basically help it out. So why you need that big marketing magic for yourself, or where is the unfair advantage? Because as you also said, like the market, or it's very saturated. So if you will go and say, I want to market something which currently happening, like Olympics, we will be lost with any budget.
Yeah, of course. So basically with this kind of thing, so for example, with the campaign we're running at the moment, we've seen the most effective getting the most effective results from it. Like I've spent about £30,000 on our current marketing campaign that's running at the moment. And the reason I did that was because, like I said, the market's really saturated. So something that has to make us stand out is our campaign. So for example, the way that Nike does these massive campaigns, this is the way we market out there. And yes, I understand that completely about the Olympics, but what we've done there is we're trying to utilize that mindset that people get when they watch the Olympics, which anyone can be an athlete, anyone can go. So what we want to do is have an so let's say I'm a gymnast, I've just performed in the Olympics, and then EndorseMe comes up as an advert. That's where it would come for the advertising. Then that person can literally grab their phone, scan the QR code on the TV, let's just say, or on their Instagram, and link straight to our app and be like, actually, yes, it's possible. You can optimize your social media platform here and actually become what you want to be. So we really want to like target that. I kind of took the idea from these like big blockbuster movies like, Cinderella Man and stuff, where people get that passion inside to really want to become athletes. We just want to show them that it's possible.
That was nice.
Thank you.
Hi, Sophia. I was wondering if you've done any, or what your rationale is model particularly on the SaaS subscription side. Are you expecting people to use this on a monthly basis?
Yeah, the reason why, so we started off quite high. I say quite high, but it's very low compared to the market. We started off at £20 per month. However, when I did some market research and through the A/B testing, it was something I asked, because for the people we're like aiming at, so the athletes, as much as they can afford £20 a month, I want it to be something they sign up to and almost forget in a way, because I don't know about you, but when I sign up to something, if it's £20 a month, I will remember. But when it's more like a £5, like when you go to Starbucks and you get a coffee, you don't even recall that going off your budget. You don't even see it. And with £5 a month, it's very inexpensive. Hence why with our marketing, I really wanted to address more of the market, because we can just get people to sign up and then it's on. So that subscription model is just running in the background quite steadily.
So we're gonna move on to the next startup. Thank you, Sophia. Bye. With Radovan from Crystal Clear Data.
So as I said, I'm from 4Leaf Finance. We are agricultural bank, and why we do what we do? Because we are passionate about finance, and also sustainability and environment. And why we started with agriculture? Because we see this is one of the biggest contributors to the actual problems in the environment, and also there might be some solution. So that's why we started with this. And we found that it's actually a global problem, and it's quite a massive one, as you can see the figures. This is all due to the old way of doing the maximalization agriculture. So there is a huge amount of land damaged, and that requires a lot of capital to repair it, and the time is running. So we thought the best way how to solve it is to use the banking, because that's the main engine of the finance of the current society. So we want to use the financing of the small and medium-sized farms in a way to finance their best practices. And jointly with that, we want to provide the advisory in order to provide the best practices, and also to assure that we help them also with the business models to move from commodities to final products. Why do I have the consumer here? Because the consumer needs to provide actually the deposits in order to finance the whole credit model. So as the core I mentioned is the advisory. I want to explain in detail a little bit what it is. So once the farmer will be approached, we associate with that agri-food coach who will do the analysis of the situation, select the best practices from our database of projects that will link the appropriate experienced farmer, who will then provide the direct advisory to the conventional farmer. And then we can provide the financing and make the transformation of the farm with the end result of organic farming, and then in decreased emissions of carbon and other gases. So that's about how we do it. And now actually to precise what we do, it is we are scoping the small and medium-sized enterprises, of course, in agriculture, also forestry, focusing initially on the Czech Republic, as the team is majority Czech. And then also we want to expand to the Central and Eastern Europe as similar economies. And later on, we aim to target also emerging markets, as there is the biggest problems in agriculture. Later on, we want also to open the industry, so most related industries, so-called agri-food, and then later on also circular economy. So circular economy best practices in agriculture, in industry. Then the consumers, we target middle and upper class, and also NGOs who are related. What we are asking from you is, of course, the capital. So we calculated 10 million euro as the minimum equity required in order to A, get the banking license, and B, to actually launch the operations. And then also we are happy to get some coaching, because it's a complex project and we acknowledge that, and then some strategy and brand positioning advisory. What we will do is 3/4 will go to the capital reserve, and the rest will go to the actual loans and operational costs. This is the profitability you have seen, and then I added this return on equity calculation, which is actually showing your real return, what you will get from your investment. And then final, why selecting us? We are a unique project because we combine interesting returns with low risks, and also potentially diversification for you, because agriculture is not as common, and Europe low risk. Then the team, we have the profiles in banking, IT, agriculture, circular economy, etc. Time is also good because the growing consumption of the bio food in the country, and then we want to expand to other countries as well in Europe, and then pandemics is actually helping that. And there is more. In the later future, we want to also open actually venture capital activities, which will invest in the agri-tech companies, so agriculture technologies, which are related to the knowledge we will gain in this project. So that's all. Happy to answer questions.
Thank you very much. Quite interesting project. One really like a big concern, why you need a bank license. Like there are at least few on top of my head, the bank providers who can give you a regular umbrella. 1 second, if you're asking for equity investment, you don't want to hold any money as a reserve. You will never get the equity investments to hold them in reserve, which just makes no sense. It's what that's banks for. It's not really equity investor. So why you need a bank license? Like why you gonna have a, using umbrella companies, or just basically go to the bank or to that investor to go step by step your project?
I mean, of course, this is the, let's say, ideal scenario, and we have analyzed that option without the banking license. However, the bank license will give more credibility, because what I didn't cover is that within this incubator model, it's actually a full ecosystem of partners, and some of them are major universities in both Netherlands and the Czech Republic. And if we have banking license, we are simply more credible partner. And also, once we will get the deposits of the retail people, it's far better to be a bank, because then again, it's about the credibility. So, but I take your point that maybe there is a way.
My point was not like you will be still bank. Your deposit will be secured. You will have basically a license to operate in European Union, and passport and whatever, everything. But you don't need to, because just the process to get bank license, we're talking years. It's not that easy. Especially in the current situation, there is maybe will not be motivation to approve you by regulators when you're setting your license. So I think it will be a huge showstopper. And also the part where you mentioned you want to create incubator for funding these projects. It's would like to understand a little bit more how, because it seems to me it's like more business model altogether. And I'm very passionate about banking part, like, that's kind of like my piece of cake. So happy to discuss this further. Just like, I see, so can you explain like why you are thinking that broadly, like to do literally more business in the one?
Okay, thank you. Yeah, it's maybe a wording exercise, because the incubator simply means that we will create a positive environment for the farmers, where we will. So to make it simple, the incubator doesn't mean the equity investment in the farms. That's maybe the shortcut to answer you. So it is really a debt financing joined by the farmer-to-farmer advice and coach approach. That means we will really be with the farmers to help them grow. So we will analyze what they do, we will select the best practices, we will give them the farmer, the person to talk to, and then we will make a sustainability assessment, which will have the KPIs. And if they make the KPIs, they will get a discount from the loan. So that's the sustainability performance loan model, if we use the term. And the ecosystem around this is that there will be institutions like R&D centers, universities, and agri-tech companies who will additionally provide other know-how if required and linked to this. So there will be interaction between those partners. And yes, I agree, it's a kind of bigger, let's say, model, but it's not about ourselves investing equity.
Oh, well, good evening, everybody. Thank you. If I can introduce AAAtraq to you all. AAAtraq is an insurance tech platform, and its focus is removing the present and widespread non-compliance of websites. AAAtraq launched last September. We've already had the service mandated by insurance groups, and initial revenue is about $200,000. We've recently signed a partnership with one of the biggest names in insurance globally, a company called Gallagher. In terms of a pipeline, it's increased a little bit today, and slides will be updated from what's on the files. We've got a pipeline of about $3.7 million, and we're inviting about 750 pounds of seed investment to deliver this pipeline and sort of take us forward, and then head in for the Series A funding later this year. In terms of the basic premise of what we're about and why we're here, as we've moved very much, and COVID has very much accelerated this from sort of a bricks to a clicks environment. You would never think of building a building that doesn't have accessibility regulations, things like wheelchair ramps. Actually, and the same principles very much apply online. And what we're doing is we're sort of looking at how we can automate this and deliver this more cost effectively and make it easier to achieve. Across the sort of main part of the US and Europe, 94% of websites do not comply presently. And they all face the stark choice of they either have to comply or face litigation and then comply. The challenge is, and the drive in the market is some very aggressive lawyers who are really just sort of preying on the sort of lack of understanding, lack of knowledge, and as they say, sort of like their own little gravy train, which when they're suing schools and taking $8,000 a time out of them, it's not really helping. It's taking books away. So when we look at the solution, let's put it into context. What's the problem? So compliance failure, firstly, it's not really seen as a risk issue. It's currently a digital problem. And accessibility failure is all too common, but it's very difficult to get right with present methods. It's an ad hoc approach. People are reacting to issues, and the challenge is the digital teams tend to want to deal with the more fun and exciting things, and this is never treated as a priority. Coupled to this, suppliers are signing off their own work. If we put this in context of it, go back to our building. A builder would never sign off their own work. We don't have the audit and the discipline and the compliance that we have in conventional business. Against this, say the standards are technical and it's expensive support staff. So the AAAtraq solution is really focused on actually not solving at the end of the line where the digital people are and our competitors are, which is all just solving it with reporting, but actually we're here to solve the root cause of the problem. We're the first insurtech to actually look at risk mitigation, risk management, and the first service, which is the digital product with the digital insurance policy. When you look at the depth of it, our secret sauce is we've been doing this for about 15 years in various guises. In terms of we've worked on the other side, which is this sort of where the competitors are, the testing market, and over 15 years we've built a database of about 3 trillion data points, which allows us to actually automate the process. So we've made compliance reporting easier to understand. We've introduced automated training, so we know what people get wrong, so we can serve specific training. And then also we've integrated a supply chain and oversight of the digital suppliers. We've then encompassed this and added, rather uniquely, in the first digital insurance policy with cost coverage for up to $50,000. We've also got the legal teams to help clients. It's all wrapped up in a single platform end-to-end solution. Clients log in and follow the tasks one by one, and stars track their progress. It's also very easy to implement, and we always look at, if you spend 1 hour in the first week, you'll be demonstrating improvement and also have something like $10,000 insurance. And this is for a solution which costs $99 a month. So in terms of where we are, we've got our first distribution partner, which is Gallagher, #1 in non-profit and #5 in the world overall. We've agreed, and we're actually working with the California teams. 10% of the California client base achieves our target of over 130 million a year. Just 10% of their clients. We're also working in other sections, other areas, and other states. Current traction, we've already dealt with an organisation called ICRA and FAIRA and ASKIP. What these are, in the US, a lot of organisations pool their insurance, as they call it. So ICRA is lots of cities grouped together. FAIRA is all the fire services in California and Nevada, and the option to do a national contract now. And ASKIP are one of the big education providers. We particularly targeted these, so we'd have the base of the pools, which are the fastest route to market, especially when they're starting to mandate the service already. We're also dealing in the commercial world, so K&N, they're looking to offer this to 6,000 of their distributors. So I say we're already in revenue, and actually I'd say quite a few prospects. So in terms of the market, every commercial website eventually in the world. So the total addressable market, over 800 million websites. And our SOM, the market in the US, where our predominantly focus is, while the requirements develop in the UK and Europe, we're about sort of 12, 15 months behind. And that's about 1.2 million. So what we're looking, so in terms of where we're looking at 5-year projection of annual revenues of just over 135 million. In terms of about 106,000 subscribers. Seed funding round is £750,000. There's no indebtedness to the company for the products or services. The seed funding is predominantly focused on delivering growth and revenue ahead of the Series A. In terms of the team, so there's myself.
Can wrap up, please. Thank you.
Okay. There's myself, and then Nick, I've worked with for 20 years, and Jamie, who's ex-army, but also his father used to be the European boss of AIG. And that's it.
Yeah, I can jump in. So about the funding that you're looking for now. So given that you've already built a pipeline of sales, what's the funding going to be used for?
Initially to start to build PR and marketing. So in this market, it's probably going to take us 9 to 12 months to sort of start our marketing and build for the sort of next year's campaign. Also, we need to recruit sales agencies, sales resource to actually deal with the might of Gallagher. We want to get out to about they've got to 40,000 sales agents, producers for us to reach to, and just the sheer number of inquiries we get, it's just we need more resource to deal with it. Against when we deal with the pools and sign them up, because the sort of the cash flow, it takes probably you've got about 4 month period to sign up the insurance pool, because you have to hit their quarterly board meeting, and then they tend to pay after 60 days. So yeah, it's more sort of funding the cash flow for the recruitment of people.
So how is the problem met now currently? So what are the alternatives, and why is this better than those?
Well, currently the alternatives, in the market we've got the offer of sort of quick fix plugins. So a number of them in the market that sort of, you go to their website, they're sort of, we call them the early snake oil. There's huge numbers of promises of compliance, but nobody actually achieves it. That's one area. The other area is digital teams using technology tools like website testing systems. But that's all about reacting to the problem, not actually solving the problem at source. Until you train the staff how to produce better content, they're going to continuously get it wrong. Until you take control of the suppliers, they're going to continuously basically sign their own work off all the time. But the great thing is what are presently the sort of, I suppose, the competitors at the sort of digital end of the market, integrating with what we do, putting our process into place, and actually building the insurance on. Actually, they all can become our partners. There isn't really an answer. The widespread failure is the big issue, and the sort of the proof point of the value.
Okay, but I guess a lot of the compliance has to be anyway specific to the business. So how does that work in the perspective of the scale of the business?
Well, there are a set of global rules about what you have to do to meet to prove that you're not discriminating online. They're the web accessibility guidelines. So there are a set of standards, and we can actually look at a website and market against that. And those standards are used in probably 85% of the sort of world. So the Americans took it on, that's nearly 30 years old, but the standards have been in place for many years. It's only in the last sort of 2 to 3 years that actually the litigation starts to get aggressive as more and more reliance online, and as the market matures, the organizations have to sort of mature with it. And actually, rather than the sort of Wild West we have today, where there are little standards, little management of quality, little management of control, regulators are coming into this, things like privacy, things like accessibility. It's probably, as we look at it, it's the other end, which we're working with a number of areas in the cyber area as well. This is the sort of other area of cyber. You've got cyber at the front end, which is malicious activity, hacking, privacy, data theft, and the sort of more sort of larger scale emerging areas, what they call the content failure, where your risk is broken links of websites, shareholders can't get information, web accessibility failure, litigation action from regulators for privacy compliance, that sort of thing. Misuse of trademarks, a whole range of areas, which is a very new market, but it's really the sign of the market maturing now as organizations have to do digital better.
Thank you.
Yeah. Okay. Thank you, everybody.
Okay, so our last startup for today is FAC.
Okay, thanks for the opportunity. Thanks for hanging around to hear about FAC. We are a platform for launching, distributing and trading regulated and unregulated digital funds. My name is Brian McNulty. I've been in the funds industry for 25 years. I've been specifically in the blockchain application within the funds industry for 5 years. And I'm very fortunate to have a very strong team working alongside me on FAC. The background here, the problem is that the current state of the funds industry, the financial markets value chain supporting that is incredibly antiquated, clunky. There's a lot of sharing of data, reconciliation between numerous parties storing the same data. And what that results in is a lot of problems, but costs. What we're doing is we are simplifying and flattening that value chain, and we're taking those costs out and passing them back to the fund managers and hopefully the end investors. We do that by creating a distributed ledger-based network that connects the different participants in the funds industry, allows them to share that data and to have a digital representation of both the cash, investors' cash, and the fund manager's fund. And that means that they don't need to do all that clunkiness I referred to earlier. So what we are doing is we have the HSBC are tokenizing investors' cash. We have a bunch of fund managers that are working with us to have a regulated fund launch playbook to allow them to tokenize the fund. And that's been done inside the FCA sandbox. We're working with the London Stock Exchange to have a solution and numerous blue chip service to service in a more efficient manner the funds that have been digitally launched. In a nutshell, if we look at the left-hand side there, the investor will top up their wallet with their cash. On the right-hand side, the fund manager has launched their fund onto the platform. So once the trade happens, they both store the same data. There's no other parties involved. Not only that, there's no failed trades, there's no reconciliation, but it's an immediate atomic settlement of the transaction. That means that the fund manager can see pending trades in real time, which is fantastic for them and gives them another product to take to market. As you can see, we're already working with over 40% of the UK market are either in our pilots or on our steerco, and we continue to grow. There are more organizations globally wanting to leverage what we're doing. It's a global problem. Eye-wateringly big numbers. We're targeting 2% of the first 3 markets over until 2025. Very conservative, very achievable numbers, since we're already working with all the parties we need to get into production, and we're the only place for these digital funds to be available. If we just stick to those conservative numbers, we're looking at 80 million cumulative revenue by 2025 before we go into non-regulated funds and many other things that we will expand into. We've already raised 1.5 million of a 3 million target raise. We have about 6 weeks left for you to join this opportunity on the same terms as the first investors that came in for 1.5.
Second.
I put my contact details on here. Please ask me questions. I'd be delighted to answer. I would also be delighted to hear from you directly if you want a deep dive in what I've covered. Thanks again for hanging around, and I look forward to speaking to you further.
Yeah, Brian, thank you very much. I will kick with one question, because pretty much all of us in this industry, like our funds are regulated or unregulated vehicles. I want to ask, like, what will be a minimal fund which will be ideal for your solution?
There's different types of funds that are applicable. We're applying this to OICs to begin, open-ended funds, which are, as you know, there's quite a substantial fund size in there, but it's equally applicable to money market funds. And as I mentioned earlier, because it will take us a year to get all of that in place, and we're launching real funds with real money this quarter, but to get the regulatory sign-off, because it's taken a year, we're going to look right now with some of the partners on alternative funds. So that's a much smaller fund size, and we're actually pointing it towards crypto funds.
Yeah, because like I see a quite, let's say, great working on the side, like Angelis, the Wabound, the guys in London, which quite of growing, which kind of like, democratization of the fund management itself. Like what you are more talking is like make a big machine which is already there, just more efficient. So
Absolutely
how you
right.
will address like the smaller market? Because if I will discuss like the big investors, like our investors EIF, 10 billion fund of funds. Yeah, it's very like it will take them years to just change the mindset to adapt your solution. Of course, you will get them because you will have a lot of references. But like I see kind of like the gap, like where you have smaller fund, like below 50 million. Like there is the part where we are basically hopeless to set up Luxembourg structures. It's crazy. Like how you can help here? Because like I think this is the part where we try to do democratic, especially in the countries like let's say Central and Eastern Europe, where it's not pension funds and there are not big institutional investors. And let's say you will collect the 5 million euros or pounds from your angel investor to start a fund. It's nearly impossible from a regulation perspective. So can you change this part as well? Because I think there is a huge demand.
Absolutely. So you're right, we need to go at two speeds. We want to be the first to market for, as you refer to, the longer tail. I don't think it's quite as long as you're referring to with many of the blue chips. We'd already got them lining up to launch digital funds on our platform at the tail end of this year, next year. So that is happening in front of our eyes. But you're completely right, in the short term, both to generate quicker revenue, but to also jump the market, we are looking at, I can take it offline with you, go into how we're actually addressing that gap in the market. And we're doing that with a couple of selected partners. But please contact me. We'll go into more detail there, especially as
I think I will drop you email.
Yeah, we can start now. We can help you now.
Brian, thank you very much for that. It was really interesting. One, I'm just interested more than anything, curious what the most common pushback is you get when you talk about selling kind of a blockchain solution to your potential customers. Like, what's the most common reason that they have some friction?
We don't really tend to talk about blockchain too much. It's just like really how it happens behind the scenes. I think blockchain, if you want the answers to, when we start talking to the techies or the innovation, there's just a lot of misunderstandings about blockchain. If you're on an Ethereum-based blockchain or something else where it shares all data with everybody in a big block, yeah, I can see why all these challenges have been raised, but we're not doing that. It's a point-to-point. The parties only store data or share data with those they're doing a trade with. They only store it themselves in a SQL database because we're on R3's Corda, which is hands down the most applicable blockchain for anything you want to get into production. So putting that aside, the pushbacks of doing this is that we're wandering along and saying we want to change the market, and guess what? Many of you are going to lose a lot of revenue. That's not easy. So I've run major successes in the industry, financial markets, of collaborative initiatives, and for many years. So what we've done is we learned the way of collaborating. You've got to get all of the customers of the parties that you want, the regulators, the investment bodies on board before you go to the parties that you want to change. And then ultimately, you still need to give them something that's better than what they've got right now. So we've done that. We got the investment bodies, the regulator, all of the fund managers. Then we went to the fund service providers and said, look, sit down with us here. Let's do some workshops. We can still increase your margins, even though we're reducing your revenues, because we're taking 60% of your processes that you're currently doing out. And also we're giving you a foot into where your customers want to go to anyway. And here are the new services that you can offer. So that's why we got RBCs and Bonies and HSBCs and Standard Charters to come on the journey. Now we're talking to the next level of service providers to join the network.
Very cool.
And as we started it in 2018, whilst I was inside another initiative. So it's been a long journey to get the buy side, if you like, the fund managers to get behind something where they are going to be the beneficiaries of, but it's a bit different from the norm.
Thank you, Brian.
Thank you, Brian, so much. Way to close the session. Good luck with everything. You can keep in touch with the judges.
Great to have everybody. Okay, hope to see you all networking.
Thanks, guys.
Thanks for
Thank you. Nice evening. Bye-bye.